Hello everyone, my name is Hitesh and I welcome you all in our new course of understanding the concept of candlesticks. What exactly are candlesticks? How are they used by traders or investors in their trading or investment decisions? How does the whole concept of trading is based on the concept of candlesticks? We'll try and understand and break down the various concepts in a very simple, crisp and concise manner. So let us jump right into our discussion. And before jumping into our discussion of candlesticks, let us try and understand what are the few questions which are in every trader's mind. Like, what are candlesticks? How to read and interpret candlesticks? What are the various key candlestick patterns, like a single candlestick pattern, multi-candlestick patterns? What are the different types of patterns within those patterns? We'll try and understand those. How does one get and understand the signals generated via candlesticks? Each and every candlestick has certain information or signal which comes out of it. How do we understand and interpret those? And what are the various type of candlestick patterns which are available for traders to use in their day-to-day trading? We'll try and understand and cover each and every topic in detail throughout this course on candlestick understanding. Now, this is how a simple candlestick chart looks like. We have a series of red candles and green candles. Each and every candlestick gives you certain information. We'll try to break down those information and try to explain what exactly a certain candle mean. Like, if you were to look down on the cursor here, you see a green candle here. There's a line on top, there's a line on bottom. We'll try and understand what does that mean. There's a red candle, there's a small candle, there's a big candle. Certain candles have bodies, certain candles have only lines, there are no bodies in it. We'll try and understand what is the functioning or what is the meaning of each and every candlestick here. Now, the first question which we'll try to understand is, what exactly are candlesticks? What exactly do we understand by them? So candlesticks are the most common and the most interactive form of charting tool which is used by traders worldwide. This, if you look at any trader's screen, if you must have seen quite a few videos which are available on the online content, you see a series of 6 to 7 screens, and you see each and every screen having different sort of candlestick chart for different product. What do we understand? Each and every candle gives you a certain information. It talks to you in a certain way and tells you this is what the market looks like. And this is the magic of candlesticks. Now, it is shaped like a candle and it gives you 4 important information, that is the OHLC, O being O, H being high price, L being the low for the day, and close being the closing price for the day. These are the 4 important information which are given by candlestick within the time frame we choose to use. And the candlestick can be plotted for various time frames like the minutes, hourly, daily, weekly, monthly, yearly basis. You can have candlestick being plotted for each and every time frame which we choose to understand and which we choose to use. Now, before understanding what exactly a candlestick, we have to understand how does the concept of candlestick originate. So candlesticks are also famously called as Japanese candlesticks, and they were developed by a Japanese rice trader called Sokyo Hona about 300 years ago. He used it to understand the market of the rice market and how he used to make trading strategies based on that. They soon caught up and they become very famous in the whole Japanese market. And they were introduced to the Western world. That is, the concept of candlestick was introduced to Western world by Steve Nissen in his book Japanese Candlestick Charting Techniques, and it caught up and become very popular in no time. So what are the various components of a candlestick? The candlestick gives you 4 different information. The first being the open being the opening price of the day. In the green candle, if you look, the open is plotted at the bottom, and on the red candle, if you see, the open is plotted on the top. The close, that is the closing price of the candle. For a green candle, the close price is above the open price, and for a red candle, the close price is below the open price. The high is the maximum price achieved. That is the top of the candle, that is the top of the wick in both red candle and the green candle is the high for the day. And similarly, the low for both the green candle and the red candle is the low for the day. So these are major 4 components: the open price, the close price, the high price, and the low price of the candlesticks. Now, this is how a simple candlestick looks like. This is a candlestick of INFOSYS Limited, and we see for different time period and for different candlestick, there's a red candle and a green candle, and each and every candle gives you certain information about the market. It is a trader who's experienced and expertised in candlestick can actually preempt the future and make a lot of gains based on that. Now, this is how a bullish candle looks like. A bullish candle always looks green in color. And what are the major understanding of it? So when the close is higher than the open, it usually means a bullish candle. A bullish candle can be a green candle or a white candle. If you look on the picture on the right hand side, the close of the candle is above the open of the candle, which means the market opened here and it closed above it, which means it's a green candle or a bullish candle. And what is the central body of a candle? The body or the part which connects the close of the candle to the open of the candle, this central green part is called the central body of the candle. What is the upper shadow? The upper shadow is that part of the candle which is not a part of the body, and it is above the close of the candle for the green candle. So you see this part, this is the shadow of the green candle. And lower shadow, this is the bottom part which is below the open of the candle until the whole candle body, whatever the remaining part is, that is called the lower shadow of the candle. Now, how does a bearish candle look like, or what are the components of it? A bearish candle is generally green by nature or black by nature, and the central body connects the open of the candle to the close of the candle, and the upper shadow connects the high of the candle to the open of the candle, if you see, which has been plotted by us on this picture here. And the lower shadow connects the close of the candle to the low of the candle. So these wicks are the shadows of the candle, and the central body is the green body for a bullish candle and red body for a bearish candle. Now, what are the basic anatomy of a candlestick? So candlestick can be a long white line or a long back line. So long body indicates heavy trading in one direction and a strong buying or selling pressure. I'll explain you with a simple case here. If you look at this white candle here, the open of the candle is here and the close of the candle is here, and there is no major shadow formation on either side. They are very small shadow, which means in a long white candle the buyers were willing to buy at the high of the candle, even at the closing of the candle, which means there's a lot of bullish sentiment in the market. And similarly, for a long black line, that is a bearish candle, the selling pressure is so high that the sellers are willing to sell at the low of the candle, and they're willing to pay the least price possible in the market, and still they're expecting more losses in the price of underlying asset in the days to follow. And what does a small body means? A small body is that candle which is slightly undecisive by nature, which means the body is small by nature and there's a lot of buying and selling activity happening in the wicks. Sometimes the bulls are having a say, sometimes the bears are having a say, and the market is not able to decide which could be the direction where the market is trying to head. So that is the anatomy of candlesticks. That is a long body or a small body. Now these are the shadows of a candle. When I say shadows, I mean the wicks of the candle. These might look harmless when you see them, but there's a lot of price action there, because the market, when they spent time, they again came back down, which means there's a lot of volume has happened in the market, which could be crucial when trades tomorrow and gives you a certain indication about the market. As I explained, the shadow is the long thin line above or below the body, and the upper shadow high is marked to the topmost part of the upper shadow. That is, you see this top is the high of the candle, and this bottom is the low of the lower shadow. That means it gives you the whole candle range of the total candlestick. And now the next important question which comes to everyone's mind is, why are candlesticks so popular? What makes them so tempting for traders to use on their day-to-day trading? The answer to that lies in the following facts. The first being, it is easy to comprehend and easy to understand. See, basically, as we already mentioned, that the candlestick gives you 4 important information, that is the open, high, low and close. And once you have all this information available on a single candlestick, it is very easy to understand and very easy to comprehend. You can understand what the market is trying to do. You can understand the sentiment of the market. And it gives a profile detailed description of the occurrences and happening of the market. So what we understand is this: each and every lot which is traded, or each and every contract which is traded in the market, is represented in the candlesticks. We can have a clear understanding that what is the market trying to do, what are sellers and buyers trying to inform us about, what their belief is, or what is their thought process about the market. We can understand the whole anatomy with the help of these candlesticks, and helps us understand the sentiment. And how does that happen? If the market is bullish by nature and we see a lot of buying happening, and there's a candle formation is green at the end of the time frame, we can understand that the sentiment is bullish. And similarly, if there's a lot of selling and the candle ends up being a red candle, we can understand that there's a lot of selling pressure in the market and the market is weak by nature. This actually is a very accurate tool in predicting the market trends. So what happens is this: like when you have a trend in the market going that there's a series of green candle, it can be easily understood that the market is bullish by nature. And similarly, if you have a series of red candles, we can get the information that the market is weak by nature, and we can actually preempt the move that the weakness could continue in the market. Now, what are the key takeaways from this chapter? Now, candlesticks are the most common and interactive form of charting tool used by the traders worldwide. It is the globally accepted form of charting pattern, and it's very easy to understand. There are 4 important components while plotting a candlestick. That is the open, high, low and close. Those are the 4 important components. The green candle signals strength in the market, and the red candle gives you indication of weakness in the market. And if the open is below the close of the candle, then it's called a bullish candle, and if the open is above the close of the candle, it's called a bearish candle. Those are 2 basic candlestick patterns. And the various time frames can be used. Now this is very important. You can have a candlestick formation for your intraday charting trades, and you can also use a candlestick for long-term trades by plotting a weekly chart, monthly chart, daily chart, and for short time you can plot even a 1-minute chart and make sense out of the price action within that time frame. Now I hope this video gave you a basic understanding of the candlestick. In the upcoming chapters, we'll try to understand the various candlestick patterns and how do you use and interpret them for your trading activities. I thank you for your patient hearing. I'll see you in the chapters to follow. Thank you so much.